Getty, welcome to DAO Talk. So excited to have you
Yeah,
here.
thanks so much for having me, Tyler.
Yeah, of course. I've heard many things about you. You're a legendary power user of Tally. So, like, this is the first time we're meeting virtually face to face. So, I'll try not to fanboy too hard because I've heard you're a legend.
Thanks. Yeah, we've made just a few governance proposals over the last couple of years here, and Tally's always been great for kind of the folks who really want to get into the analytical side of governance, being able to kind of do your sleuthing, if I may, and then also all the kind of like just having a single source of what's happening in all the DAOs. Just given that there's so many these days, it's a great platform to be using.
Awesome. We love to hear it. Well, maybe you can get us started off by just telling me a little bit more about your background. Would love to hear how you got into crypto, DeFi, and then ultimately governance, and then we'll roll from there into talking about what you're working
Yeah,
on now.
absolutely. So I have had a pretty like sequential life at this point in crypto. I got my start back in 2018 working for a Chicago trading firm, building and running kind of delta neutral strategies for them. So unlike, most people's view on trading where you just kind of like try to guess the price of Bitcoin in the future, we were constantly just doing lots of math and trying to find weird niche ways to make money in the market. And so got the chance to work with some really smart folks in Chicago for what ended up being a little over 3 years. And that's where I really got into DeFi. It was kind of the youngin on the desk at the time with my now co-founder. Lots of guys were trading, the BitMEX trade and the original perp trade, and was there Deribit options or whatever, and all sorts of things, doing just basic arbitrage back then. But DeFi was so small, no one really cared about it back then. It was just Maker. Compound was just barely coming onto the scene. There were some ideas here and there for things, but the money was so small, it was only the young guys in the office who were going to actually care about it. And so we kind of just ended up spending more and more of our time learning about DeFi, playing around with it, getting into the weeds of it, and just like totally fell in love with it. I remember when we started using Compound back in like kind of fall of 2018. And the idea that anyone could show up to the platform, deposit a collateral asset, like back then, like 0x and Basic Attention Token were like the name household names in the industry, and then like you know borrow it, withdraw, whatever instantly is so neat. Like it was just like this fascination. It was like this instant like click moment. It was just like wow, like how does that everyone like want to use this? How can we not put like the entirety of like finance on these rails on this primitive is like so fascinating. So we had a ton of fun getting into DeFi back then. Did everything underneath the sun. Had a great time in DeFi summer, and then kind of after the 3 years of the trading firm, we're like, okay, we've made a pretty penny for ourselves, but we've just been crunching numbers. Let's go actually out there and like build some cool stuff. So Eddie and I started GFX Labs with that kind of idea of, hey, a lot of fun stuff to build. We've had a minute in the industry to kind of learn what needs to be built and kind of got to work. So we've got a couple projects over here at GFX Labs, but the most interesting one by far and the one that we just launched a few weeks ago is Interest Protocol. So kind of our own bar lend protocol that came about after doing a ton of work participating as a trading firm in all these massive protocols with size capital, and then being big governance participants at Compound and other protocols and really learning the governance side of it. We're like, okay, at some point, the only way to really try to implement our view and opinions of what can be the best bar lend protocol is just to do it yourself. And that's kind of our whole attitude ever since we kind of got into the trading and whatnot. It was just if no one else is going to do it, we will.
That's awesome. Yeah, it sounds like a great path for learning DeFi. Kind of having that fundamental background on trading, and then yeah, being there from the very start is really
Yeah, that's
cool.
exactly it. I don't think we're so fortunate in the sense that we got to be really heavy early users of all these protocols, watch them and be firsthand part of the success and failure of many ideas and initiatives throughout the space, and then have the opportunity once Compound came out with Comp Token and kind of started off the crazy governance world that now exists, and Governor Alpha and Governor Bravo and so on. It's like, oh wait, not only can we be users of these protocols, we actually kind of give feedback to the protocols and try to improve them. Like that opened up a whole new category of like what you could do, what it means to participate and be a user of a protocol. And so we like really did that materially for a year and a half, and that kind of really just naturally escalated. We were back in the trading desk. Wrapped Bitcoin was just getting off the ground, and like this was back when like there was like single-digit $1 million of wrapped Bitcoin in existence, and we were the only OTC desk in existence that supported it. And I was like, wouldn't it be great if the collateral factor on Compound for wrapped Bitcoin was higher? And everyone was like, yeah, that makes sense. And so we just went and did it, and then it was higher on Compound, and now it's like the same thing that everyone's been using forever and forever. And it's like that's pretty neat that like just some kid at a computer could just like change a
Yeah.
collateral factor that could affect everyone using the platform. And sure, it's good for our business, but it was also good for everyone else. And it's like, wow, that's you can't do that in finance, right? Like that stuff is just isn't possible
Yep.
without the framework that DAOs kind of have substantiated at this point.
Hell yeah, that's dope. Um, I so that's like one of my favorite parts personally about working in Web3 is the way it almost pushes you towards building because I my background is all in like growth marketing, um, and like digital marketing generally in Web2, and I came into the space like with this skill set, maybe like you did from having been a trader, and what I've quickly found is like, okay, the next level of doing marketing in the space is like building tools, right? It's like it's so early and so raw, and there's so much like open source tooling available, and there's such a high willingness amongst participants to collaborate and like build new things that it's kind of like, well, the best way to market is to sort of like build the future you want in the space, right? So it's like I'm almost having to like learn that because I have this more traditional background, and like it wasn't cool to just like randomly like build stuff for your job, you know. Now it's like that's like the best path for me to grow Tally is like to really actively participate, for example, in the DAO space. And so that's like, yeah, I love to hear that story because it's like it's very empowering, you know, to enter an industry and be like, wait, like not only can I change this, but like I totally should, and that's like the best path
Exactly.
forward.
Like just build more useful things, and typically that works out pretty well for yourself and everyone involved in the end. And like that's just pure like rawness, and you can't really find in many other industries. I mean, I think particularly because our industry is so emerging, right? In the grand scheme of, I mean, crypto at this point has been around a little longer than like a decade, right? And then as far as like actually DeFi has been around at this point, it's like maybe 4 years, maybe five, depending on how you want to tally it. And then like really how long DAO has been around, maybe 2 years. If we excluded MakerDAO there because Maker wasn't exactly DAO for a number of years, we talk about just like the DAOs as everyone knows them and interacts with them today. It's like literally less than 2 years, just about 2 years at this point. And so to kind of think about all the stuff that's already been accomplished, the industry, the participants in it, and the kind of the actual reputations that have already been built in the last 2 years, it's like it really makes you wonder like what's going to happen over the next eight, like what's going to be at the end of the decade here for DeFi and DAOs. It's pretty much unimaginable in my mind.
Yeah, I feel the same way. Like there's this meme, which is true, that there's more DAO tooling companies than DAOs. There really aren't that many DAOs. Like it's very true, but like also there were zero 2 years ago. So it's like that's like I mean it's incredibly small, obviously, but it's like a fairly high rate of growth. And I think yeah, like we'll see. It's similar. Like there's this meme that like, oh, like we haven't seen as much innovation in DeFi that isn't a Ponzi. It's like, sure, but like we're still so early, and there's so many like amazing people building stuff. I'm very excited to see what happens. Yeah, over the next
Yeah, and
several
that's
years.
exactly it. So like when we GFX have been like heavy governance participants when it came to Compound. I really like literally from day one when I used Compound, thought it was like one of the most interesting financial tools I'd ever seen and came across. And so when we started thinking about, okay, what does it mean to develop our own borrow lend protocol? How does that gonna work? What is it gonna look like? Is this actually a thing that the market needs? It was a really long process. We've been talking about developing the protocol for like over a year. And a lot of it was like me still totally being in love with Compound, that like I was not ready to like walk away from that, and especially like through the community that was over there. I mean, it's like as far as what it was, and it's high times when things were great. Like there was a great small group of community members there, and for the most part, Labs was pretty offhand, which was like good and bad in its own way. Like the community could really do what they wanted to do, and Labs would kind of just be okay with that. And that had its, its perks for sure. But what it ended up kind of being was like, you know, a year went by and like year and a half went by, and it was like, there's only so much a community member can do. Like one of my big initiatives over there was like redoing the Oracle mechanism after the DAI 2020 event. And like that was definitely like one of the larger undertakings in any DAO in my mind for like what a legit community member can do. And then after that, it was kind of like, okay, well, we can add more collateral assets, we can do this and that, but it's like you can't really change the actual underlying function of the protocol. And if you do, like the incentives are really not there for you to do it. Um, and so once it was decided, that was like, okay, there's a lot of innovation that has kind of slowed through the bull market. Like we hadn't really seen Aave and Compound and MakerDAO do anything that substantive over the last year and a half. It was like, okay, well, sounds like it's time for like kind of the fresh face on the block to kind of do something. And so that's when we were like, okay, like the last several months ago at this point, we are like, okay, it's time. It's time to like actually go out there and build the kind of the next primitive of a money market. And that is this like notion of how do we take what exists, what everyone's done well this far, right? This notion of every bar lend protocol has to have some type of oracle system, has to have some type of liquidation system, interest rate curves, collateral system. But the name of the game is obviously capital efficiency, right? So whatever protocol is the most capital efficient protocol is the one that's going to win in the long run. But it's not only important for you to be the most capital efficient one on day one, you have to be the most capital efficient one 5 years from now too. So it's this balance of, okay, how do I design a protocol to be immediately capital efficient and then in the long run capital efficient? And then how do I also do it in a safe way, right, where that can actually exist throughout that time period? And if those are your constraints, like how can you develop protocol? We actually look to traditional finance. We're like, wait a second, banking system's kind of like been working on this exact same problem for a very long time. Maybe we should see what they're doing. And that was kind of was like born the idea of a fraction reserve but over collateralized lending protocol, where we have the same kind of functionality that exists in banks, where folks come in with dollars and deposit dollars to earn an interest rate or to keep their money secure. And other people, might want to buy a house, and they'll come to the bank and they're like, hey, can I put up my house as collateral and borrow some cash against it? And they can re-lend out the dollars multiple times over throughout this process. And we're like, well, we can just insert crypto, the assets that everyone knows, right? Bitcoin, Ethereum, et cetera, as our house in this case, and USDC and other, stable coins as our dollar, and replicate the same system, and it'll be substantially more capital efficient than what exists on Aave and Compound, and also way safer from an underlying risk perspective than what exists at Maker. And they're kind of floating peg, which we explain to people as like, okay, we're more like a pseudo commercial bank, whereas Maker is more like a pseudo federal bank, in that they're really trying to make a currency out of nothing, whereas we're piggybacking off of a bunch of other people who've already done the hard work of making a currency stable. And that's what really started the idea behind interest protocol and kind of makes us unique and capital efficient at this point.
That's really cool. I feel like going back to the first thing you said, like kind of that feeling of like, hey, it might be time to start building again, or to jump into the fray. Like I'm feeling that actually a little bit in DeFi across the board now, and it's really exciting. It's like, yeah, like Aave Maker had like so much success so fast, in terms of like TVL and revenue and stuff, that like maybe things slowed down for a bit, and like, but now it's been long enough. I think people are starting to see like, all right, if they're not going to do it, we are.
Absolutely.
And you love
Absolutely.
to see that.
There's certainly, I think there's certainly some like generations that have developed in crypto too, where you can look and see like, the first few groups who were on like Bitcoin Talk in the OG days, or were at like, when Coinbase started and whatnot. And okay, the groups that started there, they left after 2 or 3 years, started their own companies, who left then after 2 or 3 years and started their own companies. Like there are clearly these generations exist in crypto at this point, that every 2 or 3 years, the folks who were the new employees at whatever giant company, industry, brand it was, then leave and start their new industry giant. And it just, it's something that obviously exists in all the traditional tech world and really all the spaces, but then I actually properly see it in crypto is really neat too, because it's like, okay, there's a space here for the old guys who have made their imprint, who have made their money, to sit back and not worry about the space collapsing without them, and that there's also room for the new guy to come in and make their names for themselves and actually substantiate a massive market for themselves as well.
Yeah, absolutely. It's such a healthy process. And I think that's actually when we talk about like how crypto can continue growing organically in terms of participants, maybe without relying on just like, speculations like tokens that can go up but also go down. I think creating the space for people to work in it is actually the most important thing. It's like we're seeing this in DAOs now where it's like there's all these amazing like DeFi protocol DAOs, like what you're building with Interest Protocol. There's like all these other types of DAOs that are emerging now too. And it's creating like this blank space for people to come in and be like, I'm going to build like what I want, or this is something I care about, I can contribute to and work on. And I think that's actually like the right metric for growth, even less so than users. Maybe that's a trailing indicator, but like the leading indicator is like who feels like the best thing for them to do for their like life and their career and their learning is actually to build, or contribute in Web3. So it's like super exciting to see that happening.
Right, exactly. I mean, ultimately, if enough folks are interested in building the same thing, then that probably means that you're building it because you want to use it most likely. Like everything we build over here is stuff that we want to be the first users of. And so if there's 100 people that all agree that they want to build that same thing, chances are that's a pretty good leading indicator that there's a bunch of people who want to be users of that thing as well. And I think it's a nice way to go about like developing products. Although it might still be a harder road than some of the more traditional methods, it's certainly more enjoyable, and I think in the long run builds a better product.
Yeah, for sure. So I wanna dig into interest protocol a little bit more. You're gonna have to like explain it to me like in five because I don't have like a trading background or a TradFi background. I like everything I know about finance I learned through crypto, which has been like amazing actually, and a really fun experience. But I'm no expert. So first question, like what is fractional reserve banking? Like I've heard the term before. I like sort of know what it is, but like talk me through
Yeah,
exactly what that
so
is.
in the traditional world essentially, and this is much of how like Western finance operates, and really just in the majority of finance at this point works. Like banks over time, um, okay, we'll go back the clock even further. At the OG days, when like there were some miners and they had some like gold, and they were like, man, like I got to keep this gold safe because I can't just like always hold on to it underneath my mattress. They started giving it to like a guy in the town, whatever, who would like lock it up and keep it safe. Except the guy was like, hey, like you need to like pay me to do that because like that's a service. Like I gotta have a place to secure my gold. You expect me to secure it, like that's a service, right? And at some point over time, these guys would come in and deposit their gold. They would get some like receipt that's like, oh yeah, you deposit my gold, right? Like mark it down on a ledger or whatever. And then eventually, what ended up happening was like the guy who's holding the gold is like, I can actually, when people want to come in and just leave my gold here forever, I can go ahead and like lend this out to people in the meantime to utilize somewhere else in their lives if they want to pay for a good or service otherwise, don't necessarily have the immediate liquidity for that, and I can capitalize it with some other asset, right? So if a dude has a farm and has future crops, whatever, they can collateralize it with that way, and then he can lend out the gold in the meantime. And then what needs for the folks who were depositing their gold in the first place with the dude in the town, um, those guys no longer have to actually pay him to hold that gold because now he's actually making money by lending out their gold in the meantime. And then essentially this kind of begins the cycle of, okay, you have depositors depositing an asset, the bank finding folks who are interested in borrowing this asset, collateralized, right? I mean, it might not be the most traditional collateral ever, but houses and real estate are in fact the most traditional versions of collateral, and certainly the most popular ones at this point. Um, Lending those assets against those folks, those assets don't just vaporize, they have to go somewhere. And so presumably those assets at some point actually make it back to the bank to be secured and custodied again, depending on how that gold's spent with if he's trying to buy whatever sold tools to improve his business or whatever, right? And then the bank can then repeat this process over and over again. And this is kind of the notion of like fractional reserves, and that the bank is always over collateralized, there are always assets there. The risk that you have as running the bank here is that a bunch of the gold depositors will show up at an instant and go, hi, I would like my gold, please give it to me now. And then that's where you have to manage this risk of how much gold does the bank need to keep all the time. So fast forward to like modern day finance, like traditional American banking systems have very little cash in hand. Like we're talking less than 1% at this point. It used to be a number that was very heavily governed by the Fed and whatnot to actually manage inflation. But so recently that number kind of went to zero a little while ago and never really been touched since, essentially. Our thought is like, look, that number doesn't need to be zero. That number could be 50%, it could be 25%, it could be 10%. And it's just a matter of making sure that we always have enough liquidity on hand for the actual lenders of the protocol to come in and get their reserve currency out. And as long as that number is like less than 75%, less than like 60%, you are significantly more capital efficient than what an Aave or compound compares to. And really, once you get down to, if you can somehow make it to 10% and do it safely, right? Safely is the main point here, because whatever you want to do, you don't want to have a run in the bank where you can actually fail. You're way, way more capital efficient than all the existing borrow lend protocols.
Gotcha. So just to make sure I understand the distinction, or like what you're, innovating on or adding, on top of something like Compound or Aave or Maker, it's like, they don't have this concept of a fractional reserve. They're just like over collateralized directly on the deposits that have been put into the protocol.
Exactly. So when you think about an Aave or Compound, they only can lend out the dollars that have been deposited with them, right? If they stick in 100 USDC, the max utilization of the USDC market on Compound is 100 USDC being lent out. With us, we have this token that we made up out of thin air called USDI. And USDI is our ability to actually lend out an asset that is pegged to a dollar, hard pegged to the dollar, or a USDC, the underlying reserve asset in this case, that we can lend out more of. So if depositors come to the protocol and deposit 1,000, and we have a reserve ratio of 50% or something, then another borrower can come to the protocol and borrow another 1,000. So there'll be 2,000 USDI in existence, but only 1,000 USDC in the actual protocol reserve. And so what we end up doing here is we kind of take a blended model with what MakerDAO does and say, right, MakerDAO is just essentially is fractional reserve in a sense, but there's no like cap. It's just like purely infinite, and it doesn't really manage any of the risk associated with that in a very algorithmic way. Whereas what we do is we say the interest rate that everyone's charged changes based off of the demand for borrowing USDI. And so if demand's really high, interest rates spike because the reserve ratio of the pseudo bank is very low, right? Your reserve ratio being the assets that you have in the bank versus the assets that you've lent out into existence. So if that ratio is really low, the liquidity risk at the protocol is high. Thus, we should charge all the borrowers higher rates, incentivize for them to size down their positions, or for new lenders to come in and recapitalize the protocol. And they're going to be compensated through the higher interest rates that they're earning at that time. And that's that key mechanism where essentially we have a very forced PSM module. It's the best way to think about it. If MakerDAO's PSM module dictated all of the rates at Maker, then it would actually be fairly similar to what we're building. But their model is much more like a federal bank, where they're looking longer out into the future as to what the DAI demand is for, and you're looking and trying to adjust the interest rates on a more ad hoc basis than ours that are instantaneous, like the traditional compounded Aave interest rates.
Thanks so much for explaining that. I feel like, for people listening to this, there's probably a good chunk of them that are like DeFi people. So they're like, yeah, like they totally get it. And like, are probably like, why is Tyler so slow? But like, then there's probably another group that are more like me, where like they kind of understand DeFi now because they have to, because they're in crypto. And I think it's like really valuable to have that, right? Like I think for even for someone who is not like governing DeFi protocols or like trading or anything like that, it's like having that like foundational knowledge of DeFi, I feel like is essential no matter what you're doing in the space. So I really appreciate you walking me through that.
Absolutely.
In a really effective way.
It's really important at this point. The number one products all in DeFi are borrowland protocols of some flavor, right? We have Maker, which is obviously the longest running and biggest by far. Avi, of course, which is the big name brand, and then Compound, which is also the other big name brand, and then a number of smaller folks like us who are just getting off the ground and trying to carve out some of the market share for ourselves. So it's definitely a really important concept for people to understand because while everyone's looking at UST and three arrows and whatnot exploding, not many people appreciate the systemic risk that exists within DeFi. A lot of these protocols are using each other, and while so far everything has gone very well, and that the risk has been managed pretty appropriately, it really only takes one or two failures on behalf of one of these major protocols to really cause a lot of problems for everyone. So it's really important that everyone is diligent and really understands how these protocols work, even at a basic level. It doesn't need to be the most in-depth thing ever. You don't need to be a Solidity expert or something and really get into the weeds. Just keeping your eyes out and understanding the difference between a UST and a MakerDAO is very important.
Absolutely. Well, I'm glad you brought up risk management because I kind of want to start talking a little bit about governance. I'm sure with your past, being super active in Compound and other protocols, like you have put a lot of thought into how you want to approach governance for interest protocol. And I'm sure risk management plays a big role there. So would love to hear a little bit about that. Like how are you, what are you planning for the governance of interest protocol?
We've definitely learned a lot, good and bad, through participating in Compound and Maker and and everyone else over the kind of the last year or so. I think one of the biggest and most important things in my mind is making sure that the DAO is accessible to folks. And that's mostly from the proposer side of things. There's a lot of people who have good ideas about how things should be improved. And a general flaw in my mind that we see in protocols is this notion that almost every governance proposal passes. And in my mind, in order for protocols not only innovate, but really progress meaningfully, we need to normalize most proposals failing. We need a lot of new ideas, fresh ideas, and a lot of diligent thinkers out there saying, okay, this idea can be refined. We're not going to take the first person that gets proposed to the DAO, or people proposing those out of the box ideas, of which at some point one of them is going to be very productive, but maybe that's 1 in 10, and then the other 9 just have to fail. And so that's to me one of the most important things. So I'm a huge fan, obviously, of Governor Bravo and Governor Alpha that Compound and our created Arrow. We went on and kind of developed our Governor Charlie is what we've called it here, and it's kind of the next version of a governance contract that I hope more folks than just us will end up using. And it has 3 major things, but probably 3 major changes. One is that everyone at this point should be using a time lock. That should just be a given standard in every single protocol, because whether a proposal goes through and everyone is happy with it, if one person isn't happy with it, they should have some time to say, no, I'm good. I would like to opt out of this protocol. And that to me is one of the most powerful things that exists, because that you can't do that in finance, right? You get an update in your email, in your inbox being the terms of service have now changed. Good luck. That's about it. There's no opt-out period. And that's to me the most important thing. So what we've done is we merged the time lock and the governor contract into one. So there's my mind, this should be just a default de facto thing. Then on the back of Compound's proposal 62, which some folks might remember here if they know there's some of their more recent DeFi history, where the protocol accidentally distributed way more comp rewards than it was intended through an error. Compound is a robust DAO, and at this point, the only way to govern it is through the protocol's contracts. While folks and myself had identified a fix to the protocol in the first 24 hours of the issue, we had to wait 7 days, because that's just how governance allows the contract upgrades to work. And so my thought was that's just ridiculous. If you can get a robust consensus of comp holders, right, or any protocol for that matter, if you can get 50%, 60% of everyone to agree on something rapidly, you should be able to rapidly implement a fix for that thing. And so we've introduced emergency proposals as the new proposal type. Essentially, it allows the community to set a specific quorum level, so that way the quorum can be much higher than a standard one, a reduced time lock period, and a reduced voting period, and then eliminated the review period. So essentially, it's a fast track way to implement changes to the protocol, but it has to have a really high quorum to actually go through relative to another proposal. And that's a parameter that's going to be set by anyone. They can configure that to whatever their DAO's needs are. And then the third component is optimistic proposals. So I think given that most proposals do pass, and generally it's a small group of folks on every single DAO making, all the proposals, it's not really necessary to have everyone to vote on everything, especially if it's just like a rubber stamp a change that everyone widely agrees with. And so the introduction of optimistic proposals as a default, I think, is also really important because it eliminates the need for anyone to vote yes. Essentially just says, okay, here's a quorum value that governance can set. If enough no votes hit the quorum value, then the proposal just doesn't pass. Folks should be setting that quorum value lower than a standard quorum value because it should be more achievable to reject proposals than average. But in my mind, this should really help out kind of the day-to-day operations of DAOs, especially as there's a huge wide spectrum of DAOs managing risk. And if it's just little things that are just maintenance issues, like those optimistic proposals should just become normal and a lot less of a headache for just everyone involved instead of having to message all your friends, hey, there's a new governance proposal out there, you should go vote on it. So I think from an infrastructure standpoint, we're really excited behind Governor Charlie and hope that more folks use it. And that's going to be the backbone of the protocol for actually implementing changes. But that's also only like one snippet of what a DAO is, right? And what governance is the infrastructure. There's a whole lot other, on the other side of that. But I'll pause there since that's a lot of info as is.
Yeah, Governor Charlie, I love it. That's so much good stuff to unpack there. So if I'm understanding things correctly, it feels like the first two things you mentioned, so the time lock and then like the alternative governance mechanism that's like faster but requires higher consensus.
Emergency proposals.
Emergency proposals. Yeah, it's like the best of both worlds, right? So you get like the safety of the time lock and like the robustness of that, but then like if needed, there's like an alternative path.
Exactly, right. In my mind, as long as there's wide consensus for a thing, there's no reason why you shouldn't be able to implement it in a faster method. And just, set that bar really high. But if you can do it, then like, why not?
Yeah, that makes a ton of sense. And then the third one, optimistic proposals, I think like it's super interesting, right? Because you mentioned earlier, like, hey, more people should vote no. And so it would almost seem contradictory that like there's this optimistic proposals process, which like makes it so that like everyone just sort of like by default votes yes. But I actually think like it makes a lot of sense because it almost it makes it more obvious that your only job in governance is to vote no, right? It's like what you should really be focused on rather than just like, I don't know, going through the motions and like passing these proposals is like identifying areas where existing proposals need to be refined and like honing in there. I don't know if that makes any sense.
No, it definitely does. We're really known, I think, for a lot of the Uniswap work that we've done over the last kind of year for the DAO there is we're like the number one proposal maker. And the 1 bit proposal that we did has been really popular. And what's been a pain is every single time we want to implement it in a new place, even though like the first main vote to actually make it at all in mainnet passed, now we have to go through a whole new vote every single time we want to implement it on Polygon, or we just threw up a proposal to do an optimism with a community member. That's a perfect example of where optimistic proposals should exist. Like the DAO has already voted on the substantive vote of saying this thing should exist. At this point, it should just be an optimistic proposal because it's purely like maintenance work to implement it everywhere else because that's just like the nature of how the DAO works. So I think there's a lot of great examples for it. And in my mind, it's just about like not every proposal is going to fall into the same standard proposal bucket. Of course, we need more types of proposals like that exists in every form of government, right? Like that's how governments work. They have different types of votes all the time. Why should that be any different for a DAO?
Yeah, that makes a lot of sense. And it helps people focus on like the proposals that really matter, right? It's like we need to engage here where like we are deciding if we really want to take, this approach at all before we start it out. That's super cool. I'm really like optimistic, like I guess, no pun intended, for DAOs because like everyone that we talk to that's coming on to Tally is like trying to innovate in the space. Like we talked with Chris Winfrey from Hop, and like it's they didn't necessarily like create a new version of Governor, but like even smaller stuff, like they completely rethought the delegation process like during the airdrop to make it so that um, there is sort of like better distribution of delegations to they took the approach with ENS where like you have to delegate to someone else, but the way they just did like literally the UX for delegation made it so there's like much better distribution amongst like different types of people who have experience in like governance, know about L2s, know about Ethereum, etc. So that's like kind of a small thing, but like there's so much surface area for improving. Like if we just look at DAOs and we're like, oh, there's a lot of problems, yes, but like there are so many different ways that we can improve that experience of being a DAO contributor. And it's like really bullish in my mind that there's like different really smart teams just taking different parts of it and being like, okay, we can improve it here, there, 5 years from now, hopefully like a DAO will be infinitely better than a C
Yeah, I mean
corporation.
that's the best part of DeFi and crypto right there. It's like everyone's on the same team trying to go in the same direction, and information is just available everywhere. So the improvements that we make for ourselves and our own development can be implemented elsewhere, and the improvements that other people have made in the past we get to build upon. And that's, I think, really the reason why the industry has progressed so much in such little time is because it's unlike any other industry that exists where everyone is so collaborative, right? That's a luxury you only get in DeFi.
My mind has been so blown by that, like moving from Web 2 to Web 3. Like as a marketer, I spent like 90+% of my time only talking to employees at the company that I used to work at in Web 2. And now it's the exact opposite. I spend 10% of my time talking to Tally employees, 90% of my time talking to other people. It's wild, but it's like so much more fun that
Yeah,
way too.
absolutely. Can I tell you one of my favorite features of interest protocol that we did specifically for DAOs?
Yeah, of
So
course.
I've always been a huge fan of voting, but one of the biggest pains with voting is that you have this token, and if you're a trader like myself who enjoys having the actual capital power of your token, your choices are I can go put it up in the compound robbery and borrow against it, or I can vote with it. And I have to choose between these two things, which is like a terrible choice because everyone's going to choose to borrow against it pretty much. Like hardly anyone is like gonna like give up money essentially to go vote. And so what we did when we were designing interest protocols is this really neat feature where you can actually eliminate that choice. You can post a token, and for example, with the protocol that's live right now, if you're a Uni token holder, you can come to the protocol, deposit Uni in your vault as collateral, borrow your dollars, your stable coins against it, and maintain your voting power such that you can then actually delegate that to your regular governance address and then vote with that. So any governance token that follows the regular delegate specification that's pretty widely used everywhere at this point, we can add over time as collateral to the protocol and let those users not only be able to borrow against it, but also be able to vote. Which, when you really think about it, gets really interesting when we think about optimism and these other L2s and side chains that are coming out with coins that are both the fee token for the protocol and the governance token, because those are going to be massive domains in the next year or two that really interest protocol is the only one right now who's set up to attack, which is just, I think, a lot of fun.
That's awesome. Yeah, like just yet another like key thing that we need to unlock, like that trade-off between using tokens as capital versus using them for governance. So I think hopefully there will be folks who are contributing to DAOs, building DAOs, listening to this that hear that and check out what you guys have to offer there, because that sounds super
Yeah,
compelling.
yeah, absolutely. I mean, it's something that I always wish we had, so we built it essentially, right? It goes back to the very original points that we are talking about. You just build for yourself and hope there's enough people that agree with you.
Hell yeah. Awesome. Well, that was really educational, both on, the interest protocol as a protocol, and then how you're thinking about governance, how you can help other DAOs in the space. So if it's cool with you, would love to transition to just some hot takes about the crypto space
Sure.
in general. So this is a two-part question. The first question is, what is your favorite part of working in the space? You can talk about DAOs or DeFi or whatever you want. And then the second part is, what's your least favorite part of working in the space, or just like something that you want us to work together, as an ecosystem to solve in the
Yeah,
coming
I
years?
think my favorite and least favorite part about working in the space is like in the same facet. It's all about the people in the space. So like the most apt example that I love is that for the most part you can message anyone and everyone is just trying to like work together. So for example, there's this community member on Uniswap who wanted to do the 1 bit proposal on optimisms. I was like, hey, if you need help, let me know because we've done a lot of this and we do all the governance stuff. And sure enough, they're like, yeah, I'd love some help. And fast forward a few weeks, We did the governance proposal. I know like nothing about this person for the most part, except they had a good idea. We were equipped to help them, and everyone's on the same team. And so we just did just like that. And like you can't do that in any other space. That just doesn't exist. And so to me, like that's like one of the most apt, awesome examples about working in DeFi. The flip side, some of the most frustrating stuff is the people who think they understand what the hell is going on and then definitely do not, which has been very evident from a lot of the traditional players over the last few months here. So those guys are like, ah,
Yeah.
you just want to strangle them. It's like, why do you keep getting in your soapbox and trying to explain to people how DeFi works when you clearly do not understand it yourself? It's like, ah.
Yeah, it's the two sides of
Exactly,
permissionlessness.
right. You can't have one
It's like
without the
it's
other.
incredible feature, but also an incredible bug. That I think it really puts a premium on communities. Like I know the Ethereum, core protocol community talks about this all the time, but it's like that's why it's so essential. Like in many ways, the biggest like product advantage that anyone can have in the space is to cultivate a group of people around them who are like knowledgeable and open and smart and like are thinking long term. Probably that last one is like maybe the biggest one that's at a premium. Like so I think it just puts an emphasis on the importance of that for anyone who's working in space. That's actually why I joined Tally, as a side note, like because I was talking with different teams, and I was like, well, no one knows who I am, and it's like I want to contribute to this space, but it's kind of hard to break in. Not because you can't do stuff, like you can do anything, but it's like you have to get people to trust you, and like anyone who's been in the space for a while has like been burned by someone who just like wasn't the right person to do whatever thing they were talking about. And so I just like was really impressed with the Tally team, and I was like, well, that's how I'm going to make the decision right, because it's like if I associate with myself with Tally, people will be like, this person is at least not like like a complete
Yeah,
joker.
yeah,
So anyway, that's like a little bit of a side
for
rant, but
sure.
yeah, that's like the only defense we have, right, against the downside of
Yeah,
permissionlessness.
exactly, exactly. Reputation is really significant in this industry because of that permissionless aspect. So, and in the long run, right, it's the thing that kind of the only thing you can keep with you everywhere you go.
Yep. Cool. Well, I just have one last question. Not crypto related. Unless you want to make it crypto related, that's cool too. But the question is, what is your favorite place in the world and why?
Oh, that's so challenging. I think, for me, I grew up in Chicago. I'm a city kid at heart. So cities are like the I couldn't hardly live anywhere else. Despite having lived in a number of places at this point. I think for me, like Paris is really incredible for its history, but also I'm a bit of a nerd and I love the infrastructure side of Paris, which is like amazing for the era that it was built in and for what it is still today and how relevant it still all is. Um, and then on the complete other side of the coin, like I don't know, there's some pretty amazing remote spots in the world too. Like I love scuba diving, so I've been fortunate enough to go to scuba diving in some pretty neat places out in the middle of the ocean. So uh, yeah, two completely different answers there, but that's my way to make it even.
That's cool. I love it. There's a lot of nomads in crypto, so like I've made people very uncomfortable with this question. They're like, I don't know. I like all of them.
Yeah, I mean, that's the thing. There's a lot of cool places in the world to see, and I think traveling is one of the more important things to do if you have the means to do it. It's one of the best things I think to spend money on in general, because it's so easy to kind of like lose scope and exactly what like the in general what the world has to offer and what the world's problems are, and kind of to put everything best into perspective. You just really have to like get out there and just see and experience different things.
Absolutely. Well, Getty, thank you so much for coming on DAO Talk. Before we go, is there anything else you want to add, or maybe do you want to tell folks like what the best way to get involved with interest
Yeah,
protocol
absolutely.
is?
If anyone who is currently borrowing stablecoins from somewhere using their Ether app, Bitcoin, and whatnot, and is interested in kind of seeing a place that is doing a more economic way and is going to be around for the long term and it really prioritizes risk management, check out Interest Protocol. Um, Twitter, the website, justprotocol.io, etc. Feel free to join the Discord, etc. We're a good, friendly bunch of people. And then similarly, we are going to be announcing some awesome stuff in regards to Governor Charlie and some protocol upgrades. And then most excitingly is the actual governance token in the coming week or so. So that'll be all the fun things for folks to look out for.
Awesome. Governance token soon. It's not when token. It's
soon token. Tokens cool. Imminent.
Imminent token. Cool. All right. Well, thanks, Getty. Appreciate it, and we'll keep an eye out for that governance token certainly on our side.
Yeah. Awesome. Yeah. Thanks, Tyler, for having me on.